Looking for strategies to help you protect your portfolio in these uncertain times? Visit robblack.com. robblack.com, powered by EP Wealth.
One of my favorite lines from the movie Airplane was, "Looks like I picked a bad week to stop sniffing glue." That somehow translates into Wall Street, doesn't it? Let's take a look at where we start the week. February 2nd, 2026. The S&P 500's up 35 points, up 0.5%. Closing in on that 7,000 again, 69.74. Oftentimes in history, it takes a few days, a few weeks to hit that number, to hold that number, to build off that number. The Dow Jones Industrial Average is up almost 90 basis points, up 434 points to 49,327. The Nasdaq's up 150, up 0.2%, sitting at 23,612. The Russell 2000 up 30. That's up 1.1%, sitting at 2644. All four major indices higher. I believe because it's earnings season. I don't believe in much else over the longer term. That's right. I don't put a lot of value in anything on Wall Street other than earnings. Short term, yes, you have to pay attention to politics and technicals and geopolitical events and economic data. Again, you pay attention to economic data every single month. But if you were to pick me one thing to follow, it would probably be earnings followed by the jobs report on the first Friday of every month. So the four major indices are doing well. Let's take a look at some other things on Wall Street. Everything in Europe did well. It started in the red this morning, but everything's closing in the higher green area. So the FTSE, the CAC, the DAX, that's important to note. This is a worldwide rally. Except for Asia didn't come along. There was some bad numbers, not bad numbers, weak numbers out of China. Bitcoin, 78,851. It had a really rough weekend again. Today it's stabilizing, up 1,100, up 1.5%. When the retail investors, I still think, work 9 to 5 Monday through Friday, when they put their trading time in, came back and supported the asset after a weekend where I think the professional investors are selling and ringing the cash register. Not every single one of them, but you get the idea. The 10-year Treasury sits at 4.27%. Again, a problem area if you want a pure go buy stocks. You're not going to get it from me. I think 4.27% is an area where you also buy some bonds and or some money market funds. Everything in the short term. Oil lower by $3, down 5%. Gold down $48, down 1%. Silver down 1%, down 0.75 points. Copper sits at $5.85, down fractions. So the commodity is not carrying the weight today. Oil plunged today as Iran risks are easing as commodity sell-off deepens. Talk about more talks between the United States and Iran. Trump is launching a $12 billion minerals stockpile in rare earths to counter China. USAR up 5.4% on that news. Michael Saylor's high-stakes Bitcoin bet faces a fresh strain. Stock is down 2%. He's underwater on a lot of his trades now on Bitcoin. My opinion on Michael Saylor is very interesting to me and hopefully to you. Otherwise, I'm just wasting 20 seconds here. Back in the late 1990s, doing a lot of financial media to support my investment advisory business, I ran into Michael Saylor, and he was really, really big on, you got to sell all stocks because Y2K is going to destroy all the computers. When the clock on your computer turned to 00, it would suddenly think you were negative 30 years old if you were born in 1970. Something like that. And that was going to mess with Social Security and planes would fall out of the sky. I feel like he's a good, this sounds rude, a circus performer. I mean it in the best of intentions. I think I'm a good storyteller with how Wall Street works. I think he's a good promoter of events like Bitcoin and Y2K. Elsewhere out there, Disney's taking a profit hit on higher costs as parks are shining. They're down 4% today. I think we're going to find out who the new CEO is by a board vote this week. Maybe we won't know for a couple weeks after. but Bob Iger's on the way out. Success or failure starts at the top. So that's like your second lesson that I've already thrown down in just these very few scant moments. Success or failure starts at the top. Whether it's a sports franchise, who owns the company, who owns the team, who's the general manager, who's the CEO, who does the marketing. Like, success or failure starts at the top of sports franchises before it even hits coaches and players. I believe that's true on Wall Street as well. Musk is said to be in advanced talks to combine SpaceX and xAI. The market cap on that, no one's really talking about it. It's going to be in the trillions of dollars if and when it does happen, which it's expected to. The market cap is going to be so weighted that it's going to skew the S&P 500. It'll be interesting to see what Wall Street thinks about that. Palantir is expected to report very strong fourth quarter earnings. I would say they're probably one of the most important announcements this week, even more important than Amazon and Alphabet, in large part because they're a play on AI and how it's affecting the real world companies out there. Ticker symbol is PLTR. It's trading up 2.4% today. Back in November, Palantir's third quarter results topped analyst expectations, but the stock suffered. And I would say October, November last year is when a lot of seeds of doubt really started to creep in on AI investments as a whole, particularly with the Magnificent Seven. So of Palantir's revenues, analysts expect revenue from sales to the United States government to be about 40% of their sales. Very visible, very recurring revenue when that happens. I have an event coming up, Pints in Portfolio, Saturday, February 7th, 1 week from today. It's a little underperforming from 12 to 2 in Pleasant Hill. Sign up early this week before I have to start making some changes on the event. Saturday, February 7th, 12 to 2, Pleasant Hill, California. It's a Pints in Portfolio. It's ideal for people who have questions. Sipping beer, socializing, getting your financial questions answered. If you have questions about financial planning, what you're doing right, what you're doing wrong. If you're just in U.S. stocks, you're doing it wrong, for instance. If you're not thinking about taxes, you're doing it wrong. If you're not creating tax efficiencies, you're doing it wrong. Have you got the amount of insurance correct, or is it time to let go of some of your insurance as your nest egg's grown? These are great questions, and it's a 5 to 10 person event. We sit around, we talk investments. It's in Pleasant Hill. Sign up at robblackshow.com. That's robblackshow.com. Now, back to the show. Not strength today, but big picture. Relatively broad early gains. You should open your 401k today and it should be near its all-time high. And I want you to do that and reward yourself on occasion, and then go back to work for 2 or 3 months and not worry about it. Rebalance it every 3, 6, or 12 months, depending on you. I do. It stinks. It's not fun. It feels like all these websites are slightly different. There's a rebound in memory storage names. Tech names are mostly higher today. Oil prices are sharply lower as U.S. and Iran look to negotiate a deal. NVIDIA said we're not going to invest as much money in OpenAI as we said we were going to, not because we don't like the company, but because its valuation has become so rich and steep. That's interesting. What about your valuation, NVIDIA and Microsoft? So there's some lingering weakness on those two names today. United Airlines up 5%, American Airlines up 3%. They had a strong earnings report last week. Throw in Delta. They're my favorite name in the short-term investment ideas for airlines. I don't do a lot of trades, but when I do, it's usually for like vacation money. It's almost, and this sounds really awful, it's almost as if it's short-term gambling, and I know that's why I don't do a lot of short-term trading. I've had to have conversations with my son who really likes to do the prediction markets on football games. I'm like, you could only bet $1. And if you want to go big, instead of betting 3 $1 bets, you could bet 1 $5 bet. And that's it. And I'm fearful that I'm introducing him to a low-level drug like alcohol that's eventually going to become crack cocaine. But all of his friends do it. And I'd rather be a spiritual guide and say $1 and $5 is just as exciting as 10, 50, 100, and 500. Probably not, but hopefully I'm right on this one. So earlier I talked about storage names. SanDisk is up 14%. Western Digital's up 6%. They're seen as the ancillary or secondary plays, maybe tertiary plays on AI. A lot like if you just owned the S&P 500 last year, you were an underperformer because international stocks did better. That's insane to think about because the S&P 500 was up 20%. But in my opinion, shame on you if that's all you're doing. CEO Jensen Huang says the company will be involved in the OpenAI funding, but it won't be at that $100 billion level. That's a big story today. Oracle's going to raise up to $50 billion this year to increase its cloud capacity. That also is a big story in corporate news. This week, it's being perceived as something positive. A couple months ago, we're like, don't take on debt to afford your cloud build out. It's interesting how fickle Wall Street can be. Disney's up fractionally. That's not true anymore. Disney's now down. They beat revenue guidance. The company could soon select Josh D'Amaro as its new CEO. That would be interesting. Anytime a company like a Disney announces a new CEO, you're going to see people quit because they weren't announced as the new CEO. Worthy of note. Some winners and losers today. Strategy's down 2.2%. The world's largest corporate holder of Bitcoin declined 5.3% after cryptocurrency prices plummeted over the weekend. Going from 90,000 to 80,000 to 75,000 area, that's a big drop. MicroStrategy disclosed today that it had just recently purchased 855 tokens for roughly $87,974 each. So instant loss. That hurts. It's only a paper loss, but it still hurts. Some other names that are tied towards crypto, like Coinbase and Robinhood, are down 4.4% and 8% respectively. Robinhood's the worst performing in the S&P 500 trading today. I like Robinhood for the long-term patient investor, only for people like my kids, not for me. I don't need that growth. I don't need that hyperness in the stock. But if I were to buy shares of Robinhood, I'd probably buy a little bit now and a little bit in 3 months and a little bit more in 6 months for my children, for the long-term play on, I think they could be the Schwab of Generation Z. Palantir Technologies, again, expected to report earnings of about 23 cents a share, revenue of $1.3 billion. Revenue is expected to jump 80% from a year earlier. That company is moving in fast time, bullet time, if you will. Man, I don't like Michael Saylor. It's such a weird thing for me to say, and it's just a vibe that I get from having met him and having seen him over the last 30 years. He's just not my type of CEO. And that's a funny thing to say out loud. Let's take a quick break here. I'm going to put together my TV spot, then I'm going to come back and give you a second spot, maybe even a third spot later this morning. I have an afternoon podcast coming up around 2 o'clock is when it hits. It's called New Focus on Wealth. It's where you get your Apple and your Spotify podcasts, as well as other podcasts like Tuned In. It's not on Google, YouTube Music right now, but it will be probably by the end of the week. You can sign up for the event coming up this weekend at robblackshow.com. That's robblackshow.com. That's this Saturday, 12 to 2. Love to see you there. Super important that I do make these connections. It's kind of what drives me at this point in time. Pleasant Hill, California. Sign up at robblackshow.com.
Saturday, February 7th, join Rob Black in Pleasant Hill for Pints and Portfolios, a less formal event at a local watering hole for those close to retirement with $500K or more in investable assets. Drop by between noon and 2 for a little sunshine and a complimentary preliminary financial plan from a CFP that Rob trusts at EP Wealth Advisors. Whether you're on the road to retirement or already there, this preliminary plan can provide you with a second opinion analysis of where you are and highlight areas for improvement and opportunities for growth. That's Saturday, February 7th, noon to 2 in Pleasant Hill. Go to robblackshow.com and click the Events tab. Find Pints and Portfolios and click to register. You'll answer a few simple questions about your situation, and your confirmation email will provide all the details on the location of this event in Pleasant Hill and how to schedule your preliminary financial plan. Space is limited and registration is required, so go to robblackshow.com today. That's robblackshow.com. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.
Taking a look at numbers as the market's now a couple hours in. S&P 500's up 0.6%. The Dow Jones Industrial Average up 0.9, almost 1%. So it's climbing. The Nasdaq, on the other hand, is basically sideways for the morning. Russell 2000's up over 1%. Earnings season, the big question is what's going to happen after earnings season, always. The short term rallying to a fresh record high feels good, but then there's going to be some hangover effects of what's going to be the next thing to get us higher. Always something with Wall Street, in my opinion. A little bit of research that's out there today that I find interesting. McDonald's, BTIG's Peter Sala said after 2 years on the sidelines, we're upgrading shares of McDonald's to buy. From neutral, our franchise check suggests changes to the value promotion strategy is driving traffic on a consistent basis. Optimistic the new Cosmix beverage platform will launch in first half of 2026, and it should provide the next major catalyst for the U.S. same-store sales and transactions. Cosmix is obviously COS, MC, as in McDonald's. And they're going for a stop that is high-end juices, high-end caffeinated drinks, high-end lunch wraps, but not a whole big restaurant, much more of a smaller footprint. It's funny that I called McDonald's a restaurant because some people would have an issue with that. So their price target on McDonald's is $360. Porsche's weighing scrapping the electric Boxster and the Cayman as EV costs are surging. That's no major surprise. Travel is non-negotiable for many Americans. We only get about 11 vacation days. French workers get about a month off. 55% of our time off is used for vacations in the United States. In order to hit that dream trip, many Americans are making financial sacrifices. Americans plan to spend about $6,354 on travel in 2026. A family of four could easily budget around $25,000 total for about 3 or 4 vacations. Americans are cutting back on our spending, like eating out, to pay for travel. Over 1/3 consider installment plans to help afford trips, which makes me feel bad. Some people use price trackers to notify them when it's the best time to book a flight or a car rental. Hoping to get to see Harry Styles. Listen to this. He's playing 30 days in Madison Square Garden. It's going to accommodate 19.5 thousand people per night. That comes out to 585,000 tickets. 585,000 tickets for the entire run. 11.5 million people signed up, which means just about 5% of those who signed up for the presale can get tickets. Some tickets are going for over $1,000 each, even before they're on the secondhand markets. There was $1 million bet on the Super Bowl 60. Came in on New England. That was the first one, over $1 million. If he wins, he'll win just under $2.1 million. The Seattle Seahawks are currently 4.5-point favorites over the New England Patriots, and he did do the money line. I think it's going to be a bad Super Bowl. Call me crazy, but so far in the playoffs, the New England Patriots are struggling to put points on the board, and the Seattle Seahawks just look that tough. I know you're saying, Rob, we don't pay you for your opinions. In fact, you don't pay me, but that's fair. Penny pincher economy. I love this story. To afford those vacations, to afford Disney, people are saving money with generic in-store brands versus name brands. That's the way to do it, in my opinion. Budget-conscious shoppers have spent a record $283 billion on in-store brands. That's up 3.3% since 2024. I do most of things like tomato sauces and tomato pastes as the store brands. I hide them deep in my pantry so people don't see them because I have shame. I put the Italian marked up cans out literally in the kitchen so people can see how cool I am and how expensive I pay for authenticity. And I hide the store brands deep in the pantry. Disney's Magic is getting pricier. 4 days at the park, $2,300. 5 days, 4 nights at a moderate hotel, $1,800. No park hopper. Moderate dining equals about $1,200. Lightning lane for just a couple rides, $500. Total cost for a family of 4 for a 4-day, 5-night vacation, $6,200. That's before airline cost of roughly $2,000. Total for going to Disney about 8,000 buckaroos. They had a nice quarter. Their experiences unit reported over $10 billion in quarterly revenue. Domestic theme parks, $6.91 billion. International parks, $1.75 billion. It's up 7%, both international and domestic parks in last year. Income for the whole Disney was $2.48 billion. Overall revenue, $26 billion, up 5%. Probably would have been done better, but international parks struggled. Maybe, and this is a stretch, maybe it's because Europeans are saying, we don't really like that Trump guy. He's saying nasty things about our countries and our governments. Disney Plus and Hulu made about $500 million in income. Disney had a great quarter with Zootopia 2, Avatar, and the Predator film in the most recent quarter. So that's what we got out there. Lots going on. Let's get back to some of the stock market specifics, because I know that's why you're listening on a lot of levels. Maybe not all, but many. NVIDIA stock down about 1% today. Wall Street Journal reported that their plan to invest $100 billion in OpenAI stalled. It's wild watching people speculate about AI. I'm looking 2 or 3 steps back to try to get the big picture. I still like what I see. Do I like it across the board? No. All companies are created differently, just like all men are created differently. I look at companies as tax-paying men because they are defined as people. Google's self-driving car business, Waymo, is reportedly close to finalizing a $16 billion funding round. Google's parent, Alphabet, will contribute more than 75% of the amount raised. I like both Google, and I think I'll like Waymo when they come public. We'll see. But again, that's one of the reasons you own a company like an Alphabet or Google. It's because they have these research arms that are developing businesses, and they have the investment arms like NVIDIA and Alphabet to fund into these. And when they come public, they get big paydays because they're buying right now in the private markets. When you're like, oh, how do I get that? It looks so great. That's my impression of you, by the way. Oh, how do I find that? It looks so great. Barclays lifted its price target on GE Vernova to $849 from $840. GE Vernova is a power equipment electrification push. I think it's a 3-year play, not a 3-week or 3-month play. I think the stock hits 1,000 by the end of the year, especially if Microsoft signs an energy deal with a company to supply AI infrastructure. There's only so many companies can make these expensive and time-consuming AI data centers. GE Vernova is one of them. Jefferies raised its price target on Boeing to $295 from $290. Although the company reported mixed quarterly results last week, the company showed progress in its turnarounds. CEO took the job about 18 months ago, Kelly Ortberg, after a high-profile series of flubs on manufacturing, quality, and doors ripping off, as well as planes going down, which is not good for companies that make planes. Colgate posted better than expected growth for the fourth quarter by ever so small a margin, but beat earnings and revenue expectations, thanks in large part to Europe and Latin America. Colgate's a great long-term name if you believe people have teeth and they're going to need to brush them in the future. A lot of what Colgate makes is stuff that we use on a daily basis to stay clean. So should you buy the stock? I don't know. I think it's for a more mature, maybe an elderly investor who wants a little income and doesn't want to see his stock prices go up and down a lot. Today in technology, NVIDIA is the big story, with CEO Wang saying that his company's planned investment in OpenAI will not reach $100 billion, a figure that had been previously reported as a commitment. So you're starting to see another flag of hesitation. He's saying it's based on valuation, but it's a flag, not still the same. Corning is up 6% today. The stock is hitting a record high. GLW, they make glass that goes into your phones, for instance. Teradyne seeking a fresh record high. They're going to report earnings tonight. An analyst started coverage with the company at a $400 price target. It's currently around $254. That's huge upside. Seagate up 4.8%, reclaiming roughly half its loss from Friday. AMD reclaiming a bulk of its loss from Friday. Intel reclaiming its Friday loss as well. Both of those, AMD and Intel, up 4%. Palantir going to report earnings. William Blair upgraded the stock to outperform. Oracle up 2%, rising to its best close since May. So it's had a rough run. The company's down 50% from its all-time highs. And it's going for its best close in a while because it's been sliding away. India is going to allow foreign companies to fund equipment purchases without tax risks. That helps companies like Apple. They're up 1.4% today on that news. Wedbush is adding Take-Two to its best ideas. They saw a recent sell-off as overdone. It looks like they're going to come out with Grand Theft Auto 6 this November. If so, the company is going to have a wild run. Companies like Roblox, Unity, ticker symbol U, they make video game software, and Take-Two took a hit as Alphabet released Project Genie as a tool, not as a competitor, where you can make hyper-premium content videos in other worlds. Take-Two's price target goes to a $300 price target, 30 times earnings per share. Currently, it's a $227 stock. Probably the last time you're going to get to buy it. If Grand Theft Auto 6 comes out in November like expected, I would expect a good 2-year run on that stock. But there are risks. I'm going to take a break here. Come back with another segment. You can always find me online at robblackshow.com. That's robblackshow.com. Need you to sign up if you're going to sign up for Pints and Portfolio this Saturday, February 7th, 12 to 2. It's in Pleasant Hill. You can sign up to sip, socialize, and get your financial questions answered. So for people who want to know what they're doing right, what they're doing wrong with financial planning, I'll give you a complimentary preliminary plan after the event with a CFP. It's a good time to talk about what I'm buying, what you're buying, what I like, what you like. Get your portfolio analyzed after the event because we can't do it when beer's involved. I'll buy the beer. Sign up at robblackshow.com.
Saturday, February 7th, join Rob Black in Pleasant Hill for Pints and Portfolios, a less formal event at a local watering hole for those close to retirement with $500,000 or more in investable assets. Drop by Saturday from noon to 2 p.m. in Pleasant Hill for a little sunshine and a complimentary preliminary financial plan from a CFP that Rob trusts at EP Wealth Advisors. Whether you're on the road to retirement or are already there, this financial snapshot can provide you with a second opinion analysis of where you are and highlight areas for improvement and opportunities for growth. Go to robblackshow.com and click the Events tab. Find Pints and Portfolios and click to register. You'll answer a few simple questions about your situation, and your confirmation email will provide you all the details on the location of the event in Pleasant Hill and how to schedule your preliminary financial plan. Space is limited and registration is required, so go to robblackshow.com today. That's robblackshow.com. Saturday, February 7th in Pleasant Hill, noon to 2 p.m.
I recently picked up some shares of Meta. They reported earnings that once again reminded investors why the company remains one of the most efficient money printing businesses in corporate history. The earnings were strong. The strategy shift is the real story. Revenue came in strong. Margins expanded. Advertising, the engine that never seems to stall, once again did the heavy lifting, but beneath the headline numbers, Meta quietly signaled something much bigger. The company is preparing to charge users directly, not just advertisers. That's a meaningful shift for a business that has generated roughly $813 billion in ad revenue since 2019, where 98% of the revenue still comes from advertising. Meta's core strength hasn't changed. It remains the best company in the world at converting attention into cash. They are like 10 Super Bowls every single day as far as advertising eyeballs go. Instagram Reels monetization continues to improve. Facebook engagement has stabilized. WhatsApp, which once was considered impossible to monetize, now carries ads globally for the first time. They're also targeting businesses with WhatsApp as one of the most underappreciated ad surfaces in tech, especially in emerging markets. AI is quietly doing the dirty work for the company here with better ad targeting, better creative optimization, higher conversion rates for advertisers. Meta doesn't sell AI the way NVIDIA or OpenAI does. It uses AI to make advertising absurdly efficient. That's why margins keep expanding. Let's go back to what I brought up, paid subscriptions. It's something that Meta talked about earlier in the week before the earnings. This is a game changer. If they can get recurring revenue for Facebook, paid subscriptions across Instagram, Facebook, and WhatsApp, the paid tier across its core apps, The company has confirmed it will trial premium subscriptions offering expanded AI features, advanced account analytics, enhanced creator and audience controls, privacy-adjacent features like anonymous story viewing. Meta insists the core experience will remain free, but that's almost beside the point. This is about optional monetization of power users, creators, and businesses. You're going to be thinking about influencers here, small brands, power users obsessed with analytics and reach, businesses that are already paying for ads anyway. If even 2 to 3% of Meta's 3 billion plus users opt into a paid tier, that's a massive new high margin revenue stream. This is not Netflix, it's something smarter. Unlike Netflix or Spotify, Meta doesn't pay for content. This means subscription revenue drops almost straight to margins. There's no licensing risk. There's no production arms race. Meta monetizes users through ads. Subscriptions are a second bite of that apple, not a replacement. Analysts would see this as incremental, optional, highly profitable if it scales. If it diversifies Meta's revenue model just as ad cycles become more volatile, it's a smart move. AI agents, Manus, and long game. Meta's earnings also highlighted its growing ambition in AI tools, particularly with Manus, the web browsing and content generating AI agent. Vibes, its short form AI video generator. These aren't consumer facing wow products yet. They're infrastructure tools that are designed to keep users creating, keep creators loyal, keep businesses inside Meta's ecosystem. Analysts are increasingly viewing Meta's AI strategy as practical, not flashy. Focused on engagement and monetization, not headlines. Reality Labs still is a financial black hole for the company. No Meta earnings story is complete without Reality Labs. Once again, it lost billions. Once again, management defended the long-term vision. Once again, analysts shrugged, because the core ad business throws off so much cash that Reality Labs is effectively being funded for free. If augmented reality and virtual reality ultimately works, there's upside optionality. If it doesn't, ads will still dominate. That tolerance didn't exist 2 years ago. Now it does. You constantly have to be willing to shift with the environment. Post-earnings sentiment breaks down like this, in my opinion. The bull case. It's the best ad platform in the world. It's got AI that's improving monetization, not just hype. Subscriptions are adding optional upside. WhatsApp monetization is just getting started. That can move the needle. The bear case, or the cautious case on Meta. I own shares of Meta. I own shares of Apple. I own shares of Microsoft. I own shares of Nvidia. I'm putting my money where my mouth is. I'm not worried about a one-year performance. I'm investing for growth and income. I'm investing for what companies are going to be around in the future that I can leave to my kids to give them income. So the bear case, or the cautious scenario, it's the heavy AI and CapEx spending. Some quarters Wall Street freaks out about that. Some they don't. There's always going to be regulatory overhang. It never fully disappears. Subscription fatigue and risk is out there if pricing misfires. But unlike Apple, Meta is still seen as early in its next monetization phase, not late. So if I were to compare Apple to Meta, they happen to report close to each other this week. Apple equals maturity, stability, valuation, gravity. Meta equals experimentation, monetization, creativity, upside, optionality. Apple is defending a fortress. Meta is still building new rooms. Again, I like both companies. I accumulate both companies on big pullbacks. More so Meta. More so Microsoft. Some Nvidia. Google. Amazon. I like them on pullbacks. You've gotten 20 to 30% pullbacks in the names before, and it's paid off to accumulate shares. In the long run, if you get that 10%, that's probably not enough to pull the trigger. 20%, maybe. Start scaling in. 30 to 40%, that's when you jump in. Taking advantage of opportunities when it comes knocking, not when you have to invest. That's the way I play the game. Find me online at robblackshow.com. That's robblackshow.com. I do have an event coming up February 7th, Pints and Portfolio. It is in the Bay Area. I would love to see you at the event. Pleasant Hill, California, 12/2, February 7th. Sign up at robblackshow.com.
Saturday, February 7th, join Rob Black in Pleasant Hill for Pints and Portfolios, a less formal event at a local watering hole for those close to retirement with $500K or more in investable assets. Drop by between noon and 2 for a little sunshine and a complimentary preliminary financial plan from a CFP that Rob trusts at EP Wealth Advisors. Whether you're on the road to retirement or already there, this preliminary plan can provide you with a second opinion analysis of where you are and highlight areas for improvement and opportunities for growth. That's Saturday, February 7th, noon to 2 in Pleasant Hill. Go to robblackshow.com and click the Events tab. Find Pints and Portfolios and click to register. You'll answer a few simple questions about your situation, and your confirmation email will provide all the details on the location of this event in Pleasant Hill and how to schedule your preliminary financial plan. Space is limited and registration is required, so go to robblackshow.com today. That's robblackshow.com. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.